Here is my tip for new traders. Try and understand the concept of market breadth. Market breadth is the number of stocks which are participating in a move and number of stocks which are going up or going down. This kind of an information is very useful if you want to be on the right side of the market. I will just show you one of the ways in which I monitor. I look at stocks which are up or down 4%. This is one of the ways, but you find your own ways to do it. But you should monitor market breadth. It will put you on the right side. If you see in the last 4 days, there were like a lot of stocks which are going down. Today, you have 1,000 share stocks which are up 4%. So this kind of an information is useful because last time you had a lot of buying coming in. The market went up for 2 to 3 days. If you look at last time when the market had that kind of a thing, the market went up for 3 to 4 days. And so monitor market breadth, understand the concept of market breadth. Uh, and start monitoring on a daily basis market breadth, because when buying is coming into the market you will see the breadth is positive, when selling is coming in the breadth will be negative. You want to be on the right side of the moves. If you want to be on the right side of the moves, then if you monitor market breadth, you will trade on the bullish side when the market breadth is rising, and you will trade on the bearish side when the market breadth is going down on the downside, right? So make it a habit of daily monitoring market breadth. There are a lot of sites on which market breadth information is available, and some of them are free. Even this particular site which I just showed you just now is free, where you can see on market monitor on my free blog this information. And one of the things which you can do is also, if you go and see, this information is available here for many years. So it can allow you to find patterns in market breadth over many years. Basically, if you go at the end of this spreadsheet, you will see data for more years here, and that will allow you to find, like, say, 2007, 2008, since 2007. So try and understand market breadth. Start using market breadth in your trading. Once you start using market breadth on your trading, you will not likely to find surprises. At the turn, there is a big market break. Today was one of those days when there was a market break thrust. So market is likely to go up for 2 to 3 days or 5 days based on that. So if you are new and if you're just focusing on setups, try and understand market breadth and incorporate into your trading. It will allow you to be on the right side of the move, and it will allow you to make a lot of money